There we go. Let's officially start today's webinar. This webinar is called the Options JumpStarter. It is a beginner's guide to profitable options trading. Jim and if I say that too fast, it'll sound like Gemini. Jim and I, and those of you who are just joining, you'll be introduced to Jim again in just a moment. We work for a company called VectorVest. This webinar happens to be sponsored by VectorVest. It is a stock analysis and portfolio management company where we basically help individual investors retire with peace of mind. Right? And we teach many different things. So this webinar is sponsored by VectorVest. We will teach you a ton of information today. And as the subtitle there mentions, it is a beginner's guide to profitable options trading. All right. So if you are here looking for an advanced class on options, I'm going to politely say you're in the wrong class. We're not going to get into butterflies. We're definitely not going to get into butterflies. Butterflies, condors, straddles, strangles, all those types of things, or advanced mitigation techniques. We're going to focus on the core principles of options and show you how to begin to use them profitably, right? How to begin to use them and the things that you need to know. So if that's kind of where you are, you're in the right spot, right? This webinar, I want you to understand one kind of key thing. There's two key things I want you to walk away from. One is, until you know how to use options correctly, your portfolio, it's impossible for it to achieve its full potential. There's no way, all right? Now, that being said, if you're just a stock trader or a stock investor and you buy and sell stocks, you could still do well. I mean, you could be successful. You could grow your portfolio. That's fine. If that's all you want to do, that's fine. You could still do well. But your portfolio, just understand, your portfolio is not achieving its full potential. The only way to do that is through options and learning how to use options. Because there's multiple things that options will give you. We'll talk about some of them today, about leveraging your money to get more with less, how to use them to generate an extra income stream. So once you start to use options, you can also add some more income to what you're doing. And then a third piece, which a lot of people don't think about, and that's the protection side. When the market goes down, you could use options to basically protect and insure against big losses. And that's another way that you're going to be able to grow your portfolio faster. All right, so we're going to be talking about some of those today. Just understand that you've got to learn options to take that cap off of your portfolio. And my promise to you today is that in this webinar, you're going to see how you can use options the right way to make money in both up and down markets to help you possibly double your annual returns. Okay, I mentioned who we are. My name is Brian. I'm on the left-hand side. It's Brian D'Amico. I'm in the red shirt, not the black and white one. And Jim is on the right-hand side. His name is Jim Penna. He's our manager of retirement services. If you're just joining us, we talked about why we have the manager of retirement here on an options webinar. You might be thinking, options, that's like gambling. That's risky. That's short-term. That's day trading. That's basically swing trading. Well, no, here at VectorVest, we teach how to use options the right way, but also from the perspective of being safe, low risk, that all investors could do it and make sure a focus on the retirees as well, and showing you how to use options the right way. Okay, so a few things about this webinar before we kick into the meat of the webinar. I used to be a third grade teacher, so I love to have fun. I love to interact. Some of that teaching style flows through to these webinars and the way I present things. You'll have to let me know at the end if it was a good way to present to you. It's the best way that I know how to do this to get the information across. This webinar is very interactive. I'm going to be asking you lots of questions and asking you to interact with me. It is a live webinar, so yes, interact. It's me and Jim. We'll be here to help you out. So you get used to that chat box. And I think, the one more thing. I'm going to give you everything I can for the next hour. I can promise you that. But I'm sure you're aware that there's only so much I could do in an hour, right? I'm going to give you a ton of information about options and how to use them profitably. And then at the end, if you want more information, I will point you in the right direction. I'll say, hey, you want that? Go here. If you want that, go here. So I'll point you in the right direction if you feel that you're in the place that you want more information to get more out of options. All right, fair enough? If that sounds good to you and you're ready to go, just give me a yes in the chat box and we will kick things off. Chuck, you're the first one in. Chuck says yes. Craig, even though you're not a Bears fan, we're letting you slide. Craig says yes. Lisa says, let's do this. Awesome. All right, so we've been working with investors for quite a while, for decades now. I've been here at VectorVest for 17 years, and the people that we work with, they're not options experts. They come to us and they say, you know what, I don't know where to start with options. I feel confused or intimidated about the terms and everything that's out there. I hear horror stories about options. I'm afraid to use them, but I want to use them because I want to leverage my money. I want to get more with less. And when using options, that's kind of a key thing, to be able to get the same or even better returns by using less capital and putting less capital at risk. And I talked about the retirement aspect of things just a minute ago. If you're trying to grow your account towards retirement, this is an extremely important skill to learn. So I want to show you how to do that today. This is the flow. We're going to talk about how to filter out all the noise. That's a great foundation and a great starting point, because then we're going to springboard from that and say, all right, now that you know the basics of options, let's talk about when you should be trading them, when you should be buying them. Then we're going to say, all right, now that you know when to buy them, let's talk about how to set up your trades correctly. We'll talk about things like strike prices and expiration dates and what you should be doing to set them up the right way. And then we'll put it all together into a 5-step trading system from beginning to end, so you know what should come first and then what should come last. All right? So some of you in this webinar, you've started using options. Some of you have not done anything with options, but what's been the hardest part for you? Now, I'll give you 60 seconds to answer, because we've got a lot of information to cover today. So anytime I ask you a question, I'm only going to give you 60 seconds or less to answer it. That way we can keep a very good pace throughout the webinar. So what's been the hardest part for you about using options? Wayne says, overcoming my fear. Holy cow, Wayne and Lisa said like the exact same thing, and so did Craig. Getting over the fear of the unknown. Michelle says never traded. Arch says complexity. No confidence, says Dayun. Too many strategies, says Chuck. So a bunch of people are saying fear and not knowing is kind of the theme I'm getting. Jose says fear of losing money. So it looks like just by reading it, a lot of people are either saying, I don't know where to start, kind of have fear of the unknown, that type of thing. Lack of knowledge, says RJM. The other part is you're giving me some specifics about setting up the trade, like finding this trade. Chuck says too many strategies. So you are definitely in the right spot, because we're going to talk about all those things today. But I want you to write one thing down, and that is your system is going to be the thing that determines your success. And that's why the culmination of the ending of today's webinars, we're going to go through that system, because we feel you've got to have a system to be successful, of when to trade, what to trade, how to trade it, right? That's all part of your system. All right, so let's talk about how to focus on the most important information. Okay, now over time, you're going to learn more and more things when it comes to options. The more you use options, you'll learn more. But right now, if you're just getting started, we've got to focus on a few things. And those few things are really going to be the core foundation of everything else that comes with options. Okay? Because with options, there's a lot of words, right? Gamma, theta, delta, strangles, probability, whatever. And if you go to your brokerage screen, there's a lot of numbers and it could be intimidating, right? So let's talk about how to simplify it. That's a key thing, simplify. And I want to show you something that really changed my life when it comes to options, because for a long time I said, I will never get this. I will never get it. There's butterflies, there's condors, there's double diagonals. I mean, what is all this stuff? I was just like, I'll get to it later. And later was never coming until somebody sat me down and they said, Brian, there's only a couple things you really need to know, and you can understand everything else that comes with options. And I said, really? They said, yes. This is what they said, and I want to show you the exact same thing. There's only 2 types of options. And I was like, really? How could there be all these different names if there's only 2 options? Every option is made up of either calls and or puts. That's it. Some combination of calls and or puts. And once you know that, all you need to know is buyers versus sellers. Once you know those 4 building blocks, you could start to figure out the other types of trades just by looking at the components of each one. All right, so let's do this. On a piece of paper, draw out like a 2x2 grid like this. A box with 4 quadrants in it. On the left-hand side, just put calls and puts, and on the top, put buyers and sellers. All right, and just kind of lay it out like that. Just like in life, when you go to a store, if you're a buyer of something, you have rights. So if you're a buyer of an option, you're going to buy rights. Right? Buyers have rights, which means sellers have obligations. All right, that's true with anything. Buyers have rights, sellers have obligations. So now I like to call it adding layers to a knowledge sandwich. All right, so we're going to begin with one small layer at a time. Let's fill in each of these boxes, and then we'll keep adding more and more to it as we do the webinar. Box number 1 represents the buyer of a call. Buyer of a call. The buyer of a call has rights. Well, rights to do what? They have the right to buy a stock. Right? So just understand that for now. When you buy a call, you are paying money to have the right to buy the stock. Right? So you're paying. You're buying. By spending money on this call option, you are now getting the right to buy that stock at a certain price. We'll talk about the rest in a minute. Well, what does that mean? Well, the seller of that call takes on obligations to sell it. So you think about that? If this buyer of the call wants to exercise his right to buy the stock, well, that must mean somebody else is obligated to sell it to him. Okay, so those go hand in hand. And then the buyer of a put has the right to sell a stock, which is good. And that could come in very handy if you own a stock and you want an insurance policy. When you buy a put, you're buying the right to sell that stock at a certain price. Well, the seller of that put takes on obligations to buy it from you. All right, so those go hand in hand. I want to show you one other quick thing on this table that really helped me remember these trades. These 2 trades, you see how this arrow that I drew looks like an uptrending stock, or it kind of looks like the market is in an uptrend? The 2 trades that it intersects are both bullish trades. So buying a call is bullish and selling a put is bullish. So that means the other 2 are bearish trades. All right, so when you buy a put, it is a bearish trade, and when you sell a call, that is a bearish trade. Now this is not a covered call. This is actually a naked call, and we don't recommend that you go out and sell naked calls. All right, and it's not a covered call. That's something else. All right, so what I would recommend is you kind of have that drawn out. Just kind of stick it next to your computer, and the more you look at it, the more you're going to remember the basic building blocks of options. All right, so now let's take it the next step forward. The thing that really helped me understand options is when I compared it to a trade that I already knew. And I bet everybody in this room, I bet you all are familiar with what it's like to buy a stock. All right, so I'm showing you a graph of Apple. It really doesn't matter the dates or the months or the years or anything along the bottom. It could be 10 years ago. It really doesn't matter. The key thing is that you understand the concept of what I'm showing you here. So here's a graph of Apple, and it was roughly trading at $130 a share on this day. Okay, so now this is where we're going to begin a bunch more interaction. In the chat box, let me know how much it would have cost you if you went out and bought 100 shares of Apple that was trading at $130 a share. And there's a reason why I'm doing 100 shares and not 7 or 13 or whatever. We'll talk about that in a sec. Wayne, you're the first one in. Nice job. Peter, you have 1 extra 0 there. Gabriella, Vinny. Awesome. Yeah, it's a 13,000, right? 130 times 100, 13,000. So it's $13,000. All right. So let's talk about a couple of scenarios that could happen here. Apple could go down. So remember, you bought it at 130. It drops down to 125. How much are your 100 shares worth now? How much are they worth? I mean, if you went out and sold them, how much would you get back? Who's first? Who's first? Albert, I think you're first. Gabriella, Lisa, Paul? Yeah, 12,500. So you're looking at an unrealized $500 loss, right? So here's a kind of a key question. Do you have to sell? Do you have to sell your shares, or can you hold on to them? Craig's like, no, you don't have to sell. You don't have to sell. Lisa, Peter, Gabriella, nice. Yeah, and that's kind of an important thing. I told you this is going to be a springboard into options. But you might be like, why are we talking about this? This is all basic stuff about buying a stock. Well, when you buy, you have rights. You bought shares this stock. You have the right to sell. You're not obligated to. Okay? Okay, buyers have rights. And then the other thing that could happen is the stock could go up. It's worth 140. I'll just kind of answer these right now. How much are your 100 shares worth? Well, they're worth 14,000. Do you have to sell? No. I mean, you might want to because you have a $1,000 profit, but you don't have to. Okay? Okay. So now let's fill in the a little table here. And we're going to use a table similar to this when we talk about options. So let's get a good lay of the land. Over on the left-hand side is what could happen to the stock's price. It could go up or down. I only put 5 examples here, but understand the stock's price could go much lower than 120. It could go much higher than 140. This column represents how much it costs you to initiate the trade. So in our example, it costs us 13,000. The thing I want to get across here is that the 13,000 doesn't change. Whether the stock's price goes up or down, it does not change the fact that you spent 13,000 on that trade. This column represents how much money you would get back if you sold it at this price. So if the stock was trading at 130 when you sold it, you'd get 13,000 back, which means no profit, no loss. And then I'll just fill in the other ones because we kind of talked about some of those examples. All right. How much is your maximum profit when you buy a stock? In the chat box, let me know. What's your maximum profit when buying a stock? What's the most you can make when you go out there and buy a stock? Craig says unlimited. Wayne, you got it. Eric says infinite. John says infinite. Yeah, unlimited or infinite is the answer because the stock could just keep going up, right? What's the most we could lose? What's the most we could lose? What's the most you could lose on the trade? Everything. Yeah. I would just want to clarify the word everything. The most you could lose is your full investment, right? And some of you are actually tight, like William and Enrique, 13,000 in this example. So in this example, yep, 13,000 would be the most. But here's kind of the thing. You wouldn't let a stock go to zero, would you? Would you let it go to zero? No. Okay, thank you, John. John's like, no. You'd probably have some stops in place, and you would not lose the full amount. I'm going to talk about that again when we get to the option, because a mistake a lot of people make with options is they let themselves lose the full investment. We're not going to do that. I'll talk more about that later. But just understand that the maximum that we're risking when we buy a stock, is technically the amount that we paid. All right, so now let's look at this exact trade from the lens of an option trader. So again, we've got Apple. It's trading at 130. But this time you want to buy the right to buy Apple. Like, you don't want to go out there and buy Apple. Right? Maybe you don't have $13,000. Maybe you don't want to spend $13,000, but you're still bullish on Apple. So what you want to do is you want to buy the right to buy it. So that in the future, if you wanted to buy it, you could. To do that, we need options. So you would buy a call option. And remember, if you think back to that little 2x2 box, table that we drew, the buyer of a call has what? The buyer of a call has the right to buy the stock. So when you buy one call option, it gives you the right to buy Apple at, in this example, 130. Right? Now, understand, we could have specified other prices. We could have bought the right to buy Apple at 135, 125, right? But in this example, we're choosing the price of 130. Your one call, and by the way, it's called a contract, right? Your one call contract gives you the right to buy 100 shares. Okay, so one contract controls 100 shares, two contracts, 200 shares, three contracts, 300 shares, four contracts. You get the idea, right? So our one call gives us the right to buy 100 shares of Apple at a certain price, which is called a strike price. So you could specify that certain price. In our example, we happen to specify 130 by a certain date, and that's called an expiration date. We will talk more about strike prices and expiration dates in later on in this webinar in the third section. But just understand, this layer of our knowledge sandwich is telling us that when you buy a call, it's going to give you the right to buy 100 shares at a certain price by a certain date. Okay? So now it does cost something, obviously, by the term buying a call. Your one call costs $3.65 per share. So since we're controlling 100 shares of Apple, 100 shares times 365 is $365 for this one contract. Now, of course, if we chose a different expiration date, if we chose a different strike price, the price would not be $365, it would be different. I want you to understand that options, there's different prices for options. Not every option on the face of the earth trades at $3.65. Okay? It just like stock prices have different prices on different days, options have different prices. Okay, depending on the options. Okay, so in this example, it's $365 for one contract. All right, so what I want you to picture is like you just walked down the street, you picked up a piece of paper that is a call option, and you're like, oh wow, this thing that I'm holding gives me the right to buy Apple at $130 a share. Scenario number one, Apple is now trading at 125. And I want you to picture that we are now at the expiration date, which means you've got to make a decision on what you want to do. Do you or will you want to exercise your right to buy Apple at $130 a share if it is currently trading at 125? Craig, Enrique, John, Lisa, Eric says, nah. Peter, everybody says no so far. Yeah, no. I mean, why would you? Why would you spend $130 a share if you could go to your broker and buy it for $125? So guess what? That call contract that you're holding is really worthless. Like nobody would see any value in it because they'd be like, what are you talking about? That's not worth anything. I could just go to my broker and get it for $125. That option's worthless. All right, so let's flip things around. The stock goes up. It is now at $140 a share, and now we're sitting there at the expiration date. Do you want to exercise your right to buy Apple at 130 if it's trading at 140? Let me know in the chat. John, Gabriella, you guys are in first. Wayne, Lisa, Craig, everybody's saying yes. Jose says, of course. How about if I told you this? My answer would be maybe. Maybe. All of you who said yes, sure, you definitely have the right to do that. Right? You definitely could. You have the right. If you want to exercise your right, you could go out there and you could be the proud owner of Apple at $130 a share. But guess what? You'd have to come up with $13,000, right? Right? So let's say you don't have $13,000 or you don't want to spend $13,000. What you could do right? What you could do is take that option and sell it to somebody else. It's worth something. It's actually worth $10 a share in this example. Somebody would buy it. Okay, so you don't have to exercise your right. You could sell it to somebody else. So let's put it together on a little profit and loss chart or table here. Here's the stock prices again on the left-hand side. Here's what it cost us, and remember, it cost $365 for that option. And again, that does not change. All right, so no matter what, we spent that money. It is money spent, right? Money spent. Now we're just trying to make a profit on the trade to make back what we spent. So again, I want you to think about this, right? Think about that you just picked up a piece of paper off the ground and it happens to be a call option. And you see, oh, wow. And you shake the paper and you're like, let's see. Oh, this gives me the right to buy Apple at 130. If Apple was trading at 130, when the expiration date came, you'd look at that piece of paper and be like, there's no big deal, right? It's like picking up a coupon to get a Big Mac for $5, and then you go to the store and you see that Big Macs are currently selling for $5. That coupon is no good. You just buy it from the store for $5. So the option is worthless, right? There's no value to it. And just like if the stock was lower than that, there'd be no value. All right? Right? If Big Macs were selling at the store for $2 and you held a coupon that said you could buy one for $5, your coupon is really worthless. Now on the flip side, if you held an option that said you could buy Apple at 130 and it was trading at 135, well, guess what? You could immediately cash that option in and receive a $5 benefit per share. And since you're controlling 100 shares, the value of that option is $500. Now, if you were the person who bought that option, you have to subtract what you paid, and that's your profit over here, 135. And of course, if it went up to 140, that's a $10 benefit. It's called intrinsic value. That's a $1,000 value minus what you paid, and there's your profit. Okay? So let's now ask a couple of questions. Again, your maximum profit is unlimited because the stock price could keep going up and up and up, right? What is your maximum risk? On this trade specifically, wow, Chuck, John, Craig, Gabriella, you guys were fast. I hardly had the words out of my mouth, and you guys answered it. Yeah, the maximum risk is 365. That is a big difference between 365 and 13,000, right? Huge difference. So let's put it on, let's take a look at how this played out in a real example. Apple on that day, on February 6th of that year, was trading at 129.73. If you were bullish on Apple, great. It gapped up, it was moving higher. It makes sense to be bullish. So if you bought Apple, great. It went higher. A month later, if you had bought shares of Apple, you would have seen an 8% increase in your stock trade. Are you happy? Now we're not on options yet. If you made 8% on a stock trade in 1 month, you're happy, right? Eric's happy. Thank you, Eric. All right, great. So let's compare that to being an option trader. Because remember, I said at the very beginning, if you're just a stock trader, you could do fine, right? Making 8% in a month on a stock trade is fine. But how could it be finer or more fine, better, right? Here's the stock trade. 100 shares, took $13,000 of an investment to make 1,000. That's our 7.7% gain. You do one contract. You only spent $365, which, by the way, frees you up. You still now have $12,600 you could spend elsewhere on other stuff. You could buy more contracts of Apple if you wanted. You could buy options on another stock. You could buy other, shares of another stock. You now can leverage your money in other ways. But with this one contract of Apple, a month later, this was its value. You just made $700 on a $365 investment. That's a 195% return. I think we can all agree that making a 195% return on our money is better than 7.7. All right? Virtually the same profit. I mean, $1,000 is fairly close to 700, much less of a risk. Well, what can you do with your excess cash? Well, you could say, I'll buy more contracts. I'll spend $1,000 and do 3 contracts of Apple. Now I just made $2,000 instead of 1, and I still only risked $1,000. All right. And the other thing that I want to make clear on this is those of you who do like trading stocks, if you were to buy 100 shares of Apple, right? A lot of people do like let's say a 10% stop loss or 15. But let's do 10 so our math is simple. If you bought this stock and you closed it if you lost 10%, you're basically saying, I'm going to lose $1,297, right? You wouldn't be happy if it happened, but you'd close it and move on. Hopefully you're seeing the same thing I'm seeing. That is still higher than that. All right, so if you're willing to lose $1,297 on your stock trade, you might as well think about doing an option. And by the way, we don't have time to get into all the details today about the money management, but the way that we teach it is you would never even risk losing that full amount. You're not going to lose $1,095 on this trade. Well, what could you do also? You could raise it up to 10. Still, you're only risking $3,600, which is still a lot less than $12,000 to make $7,000. So think about that. You just replaced a $1,000 gain with a $7,000 gain, and you still freed up, what is that, $9,000 that you could use on something else, on a different option trade, on a different stock trade. So this is how you're going to start leveraging your money. So a question I have for you, if you could start replacing $1,000 gains with $7,000 gains, what would be the impact? You know, how would that impact you? And I'm not saying you're going to become a full-time options trader and every trade you do is going to be an option trade, but let's say like 1 out of every 10 or 15 trades that you do, you swap out with an option, and instead of making 1,000, you made 7. 3 or 4 people in a row said huge. Craig, William, Paul. Wayne says, it would help me retire more comfortably. Gabriella says it would make a big difference. Eric says big. Wallace says I'd be happy. That's exactly it. And this is not about some get-rich-quick scheme. This is to show you that you should start to say to yourself, you know, instead of just doing stocks, I'm going to mix in some options so I could take advantage of the leverage that they provide. And if I could take advantage of swapping out 1,000s for 7,000s every once in a while and have a way that doesn't put as much of my money at risk, I'm going to do that because that's how I'm going to be able to grow my account even faster. That's how you're going to be able to use options to double your annual returns. Okay? Hopefully you made that shift so far, because now that you've made that shift where you're going to want to start using a little bit of options here and there, you've got to know how to trade them correctly. So that's what we're going to get into now. Because most people get enamored with options trading and they just go out there and they buy options any day. Right? They're like, oh, I'm going to go out and buy an option today because Brian just showed me that I can make a ton of money with them. Well, instead of just going out there and buying an option any day, what you need to do is align your trades because you want to give yourself the highest chance possible for success. Okay? So, I'm going to show you a couple of examples to illustrate this point. And again, it doesn't matter the date and the time at the bottom specifically, but I thought this was a great example to illustrate this point. Okay, so if we're looking at, here's Apple again. It happens to be a different time period, but here's Apple. You look at this and you're like, oh, well, Brian said it's good to buy a call when the stock is going up. So here's Apple, and it's going up. I'm just going to buy a call on it. And you buy a call just on any day just because you think a stock is going to go up, and then that stock falls. And you're like, what's going on? Ah, man. And a lot of people let those things expire worthless, and they're like, oh, man. Let me try again. All right, here's Amazon. It's going up. It's a great stock. It's Amazon. It must keep going up, but it falls too. And you're like, what is going on here? And you start to scrap the whole system. You're like, options don't work. I keep losing. I lose and I lose and I lose. Instead, what you should do is figure out why you're losing. So let's talk about a big reason why people lose. It's because they don't align their trades with the market. Take a look at this stock graph. Look down here. That year happened to be right around October 2016. This is the market. October 2016. It was already showing signs that it was coming up off a top. It was coming down off a top. It was a lower high, moving lower. Here at VectorVest, and I mentioned earlier that this webinar is sponsored by VectorVest. Our system was signaling like red lights and things at that time. If you don't use VectorVest, you probably would have seen a similar graph if you just looked at the S&P, right? Okay, so the market was starting to come down, and when the market moves down, it pulls most stocks down with it. Even the good ones, even those like Amazons and the Apples, it pulls them down too. And when you don't pay attention to the market's direction, trades, especially those options trades, more times than not don't work out, because you remember one of the things about options is they have an expiration date. Right? They have an expiration date. So you've got to be right by a certain time period. So you got to start to stack probability on your side. So to do that, we want to take advantage of some explosive gains and explosive moves in the market. So the first thing that you got to understand is you got to play the match game. You got to make sure the market's going up, find a stock that's going up, and do a bullish option trade. Today we're focusing on buying a call. There are other bullish option trades out there. Let's focus on just buying a call. Now, if the market was going, if the flip side was true and the market was going down, well, guess what? You should find stocks that are going down, and you should find a bearish option trade, like buying a put. That would be a match. All right, so the best time to buy a call specifically is when the market is exploding up off of a bottom. We call it the explosive phase. Now, today we don't have time to get into all the phases and what to look for. Let's just focus on the explosive phase. During this phase, the markets shoot up quickly off of bottoms. It's like stretching a rubber band down, and they snap up quickly, and then it goes into a trending phase and then a topping phase. You see an explosive phase, trending, topping. Typically, in any given year, there's like 1 or 2 explosive phases off of bottoms, and there's typically like 1 or 2 explosive phases down off of tops. Okay, depending on the year. So we want to be able to find those, identify them, because that's where you can make your entire year. You can have one month that really sets you up for the whole year. All right, so explosive phases are best. So let's take a look at these time periods. All right, so down here was kind of February of 2016. Over here was November of 2016. Those were the beginnings of the explosive phases. So take a look here. Here's Apple. February 2016, when the market exploded off of a bottom, it pulled Apple up with it. November 2016, when the market exploded off of a bottom, it pulled Apple up with it. Here's Amazon. February, pulled up by the market during the explosive phase. Here's November 2016, same thing, right? Okay. Now, how do we identify those explosive phases? Well, I mentioned that, here I work for a company called VectorVest, so I use the VectorVest tool because, it makes it very simple for me. If you're not currently using the VectorVest tool, just kind of pay attention to what we got here. You might say, yeah, that's pretty cool. I might start using that. Now, if you don't use VectorVest, you can either start using it or you can just look for things like I'm about to show you. What you're going to want to do is look for times when the market is way oversold. And what we do to identify that is we here at VectorVest use an indicator we've got called the buy to sell ratio. It basically says, hey, when this indicator is really low, there's a ton more sell-rated stocks than buy-rated stocks. The market is way oversold. Our ears perk up and we're like, oh, we're starting to move our hands together like explosive phase is got to be nearby. So then once it starts to come up above 0.2, we know, boom, explosive phase is beginning. Pay attention. Look for opportunities. Right? It happened here and it happened over here. Okay? We happen to like this type of way of doing it. We find it's a lot more consistent than just using moving averages or some technical indicators. If you choose not to use VectorVest, you're going to have to rely on things like that. Okay? So let's look at the examples with like Amazon. So here's a date when you would have done it wrong. You know, the stock was going up and you just bought a call. Instead, wait for the market to hit a bottom and start to go back up. So now let's look at the differences. Right? So let's look at the differences. And I see some questions in the chat box. My coworker, Jim Penna, is going to be working on answering those, like Vinny and Wayne and so on. Just hang tight. Vinny, you can see Jim give you a very detailed answer. So that's what sometimes it took it's an awesome answer, Jim. Which reminds me, everybody, we're going to have a Q&A session at the end where Jim and I will be here to answer your questions. So hang tight. All right. I'm going to show you a screen which shows the difference between doing it wrong and doing it right. And I just want you to focus on where I put my red dot. Okay? So focus on this red dot. Ready? I know there's a lot going on here. This is buying it on the wrong day. This is a trade on Amazon. One contract, you see that down here, you would have spent $4,000. Right? It says right here, $4,158. A lot of people, when they watch these trades go against them, they make a huge mistake and they watch it expire worthless and they suffer maximum loss. Instead of doing it that way, do it at the right time, which would be when the market is exploding off of the bottom. Okay, here's November 16th. One contract still, $4,100. You can see that that's the debit over here, $4,163. By the time expiration date was coming, you're up $3,600. That's almost a 100% return on your investment. Now, let's be real here. Here at VectorVest, are we going to tell you to hold these trades to expiration? No. Yeah, I could sit here and lie to you and say, hey, look at that. You made $3,600. We're geniuses. No, right? That's not what we're going to teach you. Remember, you're getting in on an explosive phase. Explosive phases, you could see huge returns in like 1 to 2 to 3 weeks. Okay? Take a look over here at what we got. You initiated the trade over here. After a couple of days, you're up $1,000. That's 25%. After a few more days, you're up $2,500. That's like 50-something%, right? In the chat box, let me ask you a question. I want you to give me an answer. If you had a stock trade and you were up 50%, like somehow you're up 50% after a week, what's going through your brain? What are you thinking? Paul, Frank, Rodney, Chuck, Eric's like, take profits. A lot of people, sell, sell, sell. I just saw John's like, take half off, take profits. So we're thinking, man, I got to lock in some of these profits, right? I got to lock some of this in. I'm not going to watch my 50% winner turn to a loser. That's what you got to start thinking with these too. So if this thing started to go against you, you now lock in like $1,200 or so, you just made 25% in 2 weeks. You're happy, right? And remember, this isn't the only trade you've got going on. You've got other ones. You might have this other one on Apple where you did this one instead of doing it on the wrong day, you did it on the right day. You've got other option trades going on during those explosive phases. You've got a little bit into options, some into stocks. You're leveraging your money. Okay? So here's the one on Apple. You did it at the right time during the explosive phase. This one cost you $6,000. You can see that right here, $6,000. And again, I could say, hey, look at this. We're geniuses. If you held this thing towards expiration, you just made $8,700. That's 140% return. Well, no, we're going to have you out sooner than that. I mean, even at, let's just say you were up $2,000. That's what, 30 something, around 30%? If that thing starts to pull back and you maintain half of that, let's just say even 1,000. That's $1,000 on a $6,000 investment. That's still pretty good for 2 weeks worth of work, right? But it's only possible if you can understand when the market is hitting these explosive phases. So would this give you a competitive advantage? I mean, think about it. You've got thousands of other investors out there buying options haphazardly, randomly, on any day, but then here you swoop in and you know exactly when to buy. You're buying at the right time of the year, the right time. Is this a competitive advantage? Wayne's like, yeah, it'd be like a super person. Yeah, Gabriella, Lisa, yeah, this is a competitive advantage. So I want you to make another shift. Instead of choosing to buy options any old time, align your trades. By aligning your trades, you saw in those examples, that's how you're going to be able to stack probability in your favor and possibly double your annual returns. You've got to pay attention to the market. All right, you ready? Section 3, if you're kind of looking away, you've got to look back now. All right, if you're multitasking, stop it. Shame for multitasking. All right, because now that you know you want to start using options and you know, hey man, I got to align my trades, you got to know how to set up the trades correctly. All right, we got to think ahead of time. So now I'm sure you're sick of looking at Apple, so I put Home Depot in here. Okay, Home Depot. It's a nice looking chart. Probably the market was going in our favor at that time. So you're thinking, great, Brian told me to buy a call. Man, I'm going to buy a call. Which one should I buy? Well, I'm just going to buy the cheapest one out there. This one only costs $47. I'm going to buy it. That's a mistake. A mistake a lot of people make is when they decide to go out there and they buy options, they just go out there and they find the cheapest one and they treat it like a lottery ticket. And what happens with the lottery? You lose almost all of the time. Let's not treat this like a lottery system. Remember, we're thinking about growing our retirement account. We're not just throwing our money away here. So what happens a lot of times when people treat it like the lottery? Well, they watch their option expire worthless, and you might be thinking, or you might have thought in the past, oh, but it's only $47. And then what do? You go out and you lose 47 on the next trade. You lose 50 on the next one. You lose 100 on the next one. And it's like getting punched in the face, like little jabs. Pretty soon, you knock your portfolio out. It's like death by paper cuts. The thing slowly bleeds to death. All right, so let's stack probability on our side. So here are the two core problems that people make all the time. Number one involves a thing called time decay. What you're looking at here is what happens to the value of an option just because time goes by. Think about like putting milk or steak on the shelf at a store. As the days go by, it is getting more and more towards where it's no good, right? It's decaying, let's say. Okay, so here's your option. In the first 135 days of a 180-day life cycle of an option, it loses half of the value. You know what that means? The other 45 days, it loses the other half. It drops off exponentially. So if you've got a stock and you play, let's say you place the trade here on this day here, okay? A lot of people who do it wrong, they buy a really cheap option that expires only like a couple of weeks away because it's cheap. It's really cheap. Or they buy this one that's only like a month away because it's still cheap. But let me overlay the time decay. As each of these days go by, the value of that option is dropping off exponentially just because time is going by. And even if your stock is going up in your favor, this time decay is pulling your option value down. And a lot of times the stock price just can't overcome it. All right? You've got to give yourself enough time to be right. So when you're buying options, you got to give yourself more time than 45 days. You know, we focus on more time than that, like 60 or more. All right? Now, the second thing is where you set your strike price. You know, some people, in their attempt to buy cheap options, buy options where the strike price is so far away from the stock's price. And now with a call, that means they're buying strike prices way up here. Understand, call premium does decrease the higher you're going with the strike price, and it makes them cheaper. But the probability of your success decreases the farther away you go. Okay? Remember, it's like a lottery ticket at that point, and you just keep losing and losing and losing. So we're going to take a look at Home Depot here. The exact same stock, the exact same trade date, right? The exact same stock, the exact same trade date. The only difference will be the strike we choose and the expiration. So here's scenario 1. Trade date is March 1st, but we're choosing an expiration that's too close and a strike price that's too far away. This ends up being in a death by paper cut. You just lost $460. All right? People let it expire worthless, and they're like, oh man, I just lost $460. That's all right, I'll go do another one. And they lose $460 again, and they lose $460 again. Death by paper cuts. But let's do the trade again, but this time we're going to do an expiration that's further away. This time May, and we're going to choose a strike price that is closer to where the stock's price is. This time, we gave the stock enough time to be right. This end result was an $8,000 gain. So picture that. I mean, you're doing the exact same stock, except you just set up the trade the right way. You knew how to set it up the right way. So instead of losing $460, you just gained $8,000. That's how you're going to start to double your annual return. So you've got to move from being where you got no rules to where you're using rules that give you a high probability of success. All right? So now let's lay out the system, right? I told you, your system determines your success. So there's 5 steps. So what I want you to do is get out a piece of paper and write these 5 things down. Because, I mean, you should, when you're thinking about your option trades, you should think about your trades in this order. All right. So I saw somebody in the chat box said, well, how do you know, when you should do this? How do you know how do you know? Well, let's go through it together. The first piece was market direction. Market direction. A lot of traders just ignore it and they go out and they place trades. But as you saw today, when you align your trades, you're giving yourself a much higher probability of success. And it's an extremely important part of the system. Not only that, but you've got to do it when the market is exploding off of the bottoms when you want to do calls and exploding off of tops when you want to do puts. All right. Now, some people do things like using moving averages to see how far above and below the S&P is. I showed you the tool that I use. It's very straightforward. It's very rules-based. Here at VectorVest, we use that market timing graph and the buy to sell ratio. That happens to be what we choose to use because it's been time tested. But no matter what you do, you want to have as part of your system. So if you're writing down your system, your market direction piece, you need to have a way to identify explosive phases, but not just those, but also the trending phases when the market is trending. Part 2, once you do that, you want to have a way that finds stocks that are highly likely to move in the same direction as the market. You don't want to just trade stocks that you know about or you hear about from the gurus on TV. You need to find stocks that, let's say the market's going up. You need to find good stocks that are in uptrends during that up market. Now, let's say the market's going down. Well, you want to quickly find bad stocks that are in downtrends when the market's falling. Remember, you got to play the match game. So you don't want to be spending hours and hours doing that either. So you want a quick way to find those trading candidates. So now that you got a list of stocks, so now you're going to take that list of stocks and you say, all right, which ones make the best option candidates? All right, because not every stock is option worthy. We didn't have time to get into all the details here because we didn't talk about volume, open interest, things like that. We talked about calls versus puts, but there's some other things we didn't have time to get into fully today. But just know you want to have a way that takes the list of stocks that you got and looks at things like volume, open interest, volatility, and say, all right, which ones make the best option candidate? Once you go from there, you're going to say, all right, now I want to set up this trade. And today we were looking at strike prices and expiration, and we talked about where to set your strike, kind of closer to the stock's price, where to set your expiration, and we talked about being more than 45 days away. But we didn't talk about risk to reward ratio and looking at things like that when setting up the trade. Then part 5 is you need to have your plan in place ahead of time. When are you going to take profits off the table? When are you going to close the trade totally? When are you going to close it to minimize losses or lock in profits? You got to have that all laid out in advance. We talked about a little bit today about not giving back more than half of those gains. There's a little bit more to it than that, but there's this 5-step process of things you should be thinking about when doing these options trades. Like I said, we only had about an hour to go over some of these things today. But what I want you to do, take out your pen and just mark down the things that you're good at. Let's do that first. Take your pen and say, all right, I think I got market direction pretty much nailed. I can do that. And those of you who are here who are using the VectorVest tool, you probably, you should be giving yourself a star, or at least considering a star there. I'm going to give you 10 seconds on this. Don't overthink it. Give yourself a star or a frown. Go. Like if you feel you're not good at something, give yourself a frown. 5 seconds. 4, 3, 2, 1. So by the time, like right now, you should have some combination of stars and frowns. In the chat box, let me know, how many stars do you got? What did you just learn? Do you have 1, 2? Some of you might have 5 stars. So I see Chuck and Eric and Craig all have 2. Bjorn says 4. That's awesome. So if you're anywhere below 5, you then know where to focus your attention. Right? Like if you're like Tarsum, you're like, I got the first 2 as stars. Well, guess what? You now know that you've got to then start focusing on those 3, right? Okay. And I think that it starts to be like why you showed up here, because you might not have known where to start. So now you know a little bit where to start. Maybe you felt confused or intimidated, or you've tried options and lost multiple times, but you still want to use them to learn how to leverage your money. Your system is the thing that determines your success. You should have made shifts today to move from stocks to mixing in some options, to know that now you got to learn how to align your trades with the market, you got to set them up the right way, because setting them up the right way versus the wrong way makes a huge difference in your success. In the chat box, do you see how powerful options can be when done right? Craig's like, yes. Eric, yes, yes, yes. Now, if you remember from the beginning, I said I was going to give you everything I could for the hour that we had. And I'm hoping you'll give me 5 more minutes. Can you give me 5 more minutes? The reason I say that is because some of you in this webinar are at the point where you're like, you know what? I learned a lot today. I'd love to take the next step. All right? I want to take the next step. And for those of you who are ready to take the next step and want to basically get results quickly, I want to point you in the right direction. Because either way, if you choose not to take the next step, I hope you at least walk away from today's webinar and you're like, you know what? That was awesome. I learned a lot. Right? I'm hoping you'll at least share that with me in the chat box that you got some value out of today's session. But if you're at the point where you're like, you know what? I got to do this. I've got to take that next step for my retirement. I want to get results quickly though. I don't want to spend the rest of my life learning options. Well, you have a choice. I mean, you could walk away and do it alone and learn by trial and error. Our recommendation is that you bypass trial and error and you get right to an answer quickly. And that's why myself, Jim Penna, Ron Wheeler, who is our options income coach, and the founder of VectorVest, Dr. Bart DeLito, we got together and we put together a course called the Options JumpStarter, right? To zap you basically into action very quickly. We put this course together so that after a period of 6 weeks, you will be ready to go and start to be able to trade options successfully. Okay, so if you're new to options or have struggled with them in the past, this is the course for you, because we're going to take you by the hand and guide you through the exact system to use. All right, how to find, how to set up, how to manage your trades. Roger here, he took the course and he said, I recently quasi-retired, having left my company after 24 years. I took this course to learn basic strategies, to reduce risk and gain better odds for success, and I loved it. If you're like me and you've never traded options before, I would stress that you should not make a move until you've completed this course. Emotionally, I'd say that when I do enter my trades, I do so with much more confidence. And psychologically, I feel the outcome of my trades will be positive and I'll be making money, and that puts me in a great psychological state. So let me just walk you through the course really quick. All right, so you have a better idea of what this course is and what is involved here. All right, Module 1, we go super deep. We spend at least an hour building the foundation. Today we did an hour on everything. We're going to spend at least an hour on the strong foundation. That way you don't get frustrated by all the terms. Everything is rules based. We're going to talk about all the main terms you should be looking at and exactly a value to be looking for. We call it the sweet spot identifier. All right. Modules 2 and 3 get into the specific trades of calls and puts. We start off with calls because we want you to learn how to make profits in up markets. Because remember, those explosive phases could really make your year. The outcome of this module is you're going to know the exact signals to look for to identify those blast off phases, the best times to trade calls, right, and the exact rules for those successful trade setups. Then we flip it over to puts, because if you don't know what to do in down markets, it can be kind of frustrating, right? Because you watch your portfolio stall or give back gains. How about instead you learn how to profit in a down market? That's what we'll do in Module 3. Then in Module 4, we're going to show you all about trade selection, how to quickly find the best stocks, how to match those trades with the market, and how to identify which of those stocks that you just found make the best candidates for options. Then in Module 5, it's all about trade management. You got to have a game plan in place on what you're going to do when. Profit targets, exit criteria, objectives, the whole thing. It's got to be set up in advance. And then guess what we do in Module 6? We take you all the way through to placing the trade. A lot of places out there teach theory, like, oh, this is what a call is, good luck. This is what a put is, have fun. No, we're going to lay out the exact step-by-step system from beginning to end, all the way up to, hey, this is what it's going to look like in a broker. This is how your option chain is going to look like. This is how you should enter your order to enter the trade. This is how you're going to enter it with your broker to exit. Okay? Now, we also have some bonuses, and actually some pretty killer bonuses. The first one is one that our manager of retirement, Jim Penna, who's here with us tonight, he put together. It's called Covered Calls for Income. Because the main course will teach how to buy a call and how to buy a put. In essence, I mean, that's kind of what it's going to go through. One of the most powerful option trades that every retiree should know is a covered call to generate a consistent source of income. Okay, so the outcome that you get from this bonus module is you're going to know the best time to trade covered calls, how to set them up correctly to collect income, and how to manage that trade. You're going to see how Jim does it every single week with his coaching clients. He's going to lay it all out for you. In fact, Doug here said, I wish I had taken this course 20 years ago. It gives you the basics of puts and calls with some simple rules and strategies that you can understand and implement very easily. And then he said the bonus session on covered calls alone makes this course worth it. He said it spurred him to look at some of the stocks in his IRA and dump some of the losers and place covered calls on others. So he's started to generate income right away. Okay? Those of you who are on today's webinar, if you do not have VectorVest right now, we'll give you 60 days of access to it. All right? Because we want you to see what the tool is like, and you can make a judgment on whether you think it's worth it or not. Right? But we're still going to, in the course, we're still going to teach you how to trade options regardless of whether you use the tool or not. Now, we do feel it'll be faster for you if you do use the tool. So we'll show you how to do it in the tool, but we're also going to show you how to do things with your broker, and you'll be able to make a judgment call. All right? So if you don't have VectorVest, you get 60 days of access to it, which actually lasts longer than the course. Now, we have two versions of the course. We have a self-study version. All right, we have a self-study version, which you kind of do at your own pace. But we also have a mastery session. So if you choose the mastery package, okay, it's where you get all the recorded materials as well. But you also meet up with us once a week in a live webinar. So we will give you the course. Each week we'll give you a module, and then the following week, we'll get together on a live webinar and talk about each of those modules. All right, so we'll do that for 6 straight weeks, making sure that you're able to implement what you learn. Now, I know some of you are probably thinking, but what if I can't make it to one of those live sessions? No, I'm not available on Wednesday, or I'm not available at this time. Don't worry about it. First off, you can be extremely successful just by going through the recorded materials. But number 2, we'll give you a private email address where you can submit questions to our main options team. And what we'll do is we'll either answer you directly or we'll say, hey, we're going to answer your question during the live session. And if you can't make it to the live session, watch the recording and you'll hear us answering your question. All right? So you could still benefit. All right, so you get all these things. You get the JumpStarter course, the bonus modules. The bonus module is also going to be taught live. The mastery sessions, total value is over $2,000. Here's what we're going to do. If you order before the end of the webinar, we have a special deal for you. So typically the mastery package is $495, and the self-study is $295. If you order before we finish today's session, instead of $495 for the mastery package, you get it for $295, the same price as the self-study. So it totally makes sense to do the mastery package. You just got to go to VectorVest.com/jumpstart. We got that link in the chat box for you. This is also 100% guaranteed. Really, you could go through the entire course. And if you go through the whole thing and you're like, you know what? I don't think it taught me how to trade options. We'll give you all of your money back, every penny. Okay? But, we do require actually that you do the work. Because we know it works. We're 100% confident that it works. But if you want your money back, we'll give you your money back. Just let us know. No questions asked. And we might ask you a question, but we'll still give you your money back. All right. Now, David says the Options JumpStarter was perfect, for the beginner. It taught me all the basics that I was looking for. Great staff, great course. Financially, I'm up $100,000, tenfold compared to just buying and holding a stock in a very short time. He says that leverage is wonderful. I would recommend this course for everyone that wants to live comfortably and have the ability to retire. This course and VectorVest are a blessing. All right. So when you go to VectorVest.com/jumpstart, you can actually read several other comments from prior students. You might find a prior student that is kind of like you, and you might be in the same position. You just got to ask yourself, what would it cost you not to do it? How much? A big one is how much money are you potentially leaving on the table because you miss out on the next explosive move? How much time and energy are you spending trying to figure it out all on your own? I had somebody say, you know what, Brian? I just lost $295 on my most recent trade. I've got to fix this. So I'm going to buy this course and invest $295 to fix what I'm doing wrong. Right? So think about it that way. So again, if you order before the end of the webinar, you get the Mastery package for $295. It is the lowest price we've got for the Mastery package. It's even lower than any Elite pricing that we've got. If you're an Elite member of VectorVest, typically that Mastery package is $397.50. So $295 is the lowest price. So when you go to VectorVest.com/jumpstart, we can actually do this together. So click on the link in the chat, or just pull up a web browser and go to this link here. So when you go to that link, you're going to see a page with a big yellow button on it that says register today. All right, so just click on that big yellow button, and it will bring you down to a section that has these two buttons. It makes the most sense to click on Mastery Package because you get everything that's over here plus more stuff, and it's for the same price. So you might as well click this, even if you can't attend the live sessions. You might as well do this, right? All right, so VectorVest.com/jumpstart. When you click on this button, you'll see a page that looks like this. Don't worry about discount code. There is no discount code. There is no discount code. It's already listed right here, $295, $295. Just fill in your details and hit register. That's it. Okay? So again, VectorVest.com/jumpstart. I'm going to stick around, answer whatever questions you've got. It's been an absolute honor to do this. I love teaching this webinar. Again, I hope you took this webinar and you're like, you know what, that was a ton of value in this webinar. If you are joining us in the course, let me know, let Jim know in the chat box. Just type in, I am in. Right? You just type in those words, I am in, and let us know that you've joined so that we can get an idea of the names of people who are going to be with us. Wow, you guys are fast. Wayne says, I am in. Craig, William says, I'm in. Gabriella, I am in. Kenny, I am in. Welcome aboard. By the way, you should have immediately seen a confirmation page with all the details, like a link to the course, the dates and the times of everything. And by the way, check your email, because an email would have been fired off to you immediately with all of those same details. If you find that email in your junk folder or your spam folder, please drag it back over to your inbox. That'll help make sure that future emails don't go to your junk. Okay? So Kenny, Pat, Rupesh says I'm in. Tarsum says I'm in. Andre says I'm in. Man, welcome aboard. It is super pumped. I'm super pumped up. I'm so excited. It's hard to get the words sometimes. But I know that doing this, and I think I speak for Jim to say that, we always get pumped up to be able to teach people things that could, change your life. Okay? Enrique says I'm in. So I'm here to answer whatever questions you got. I see one of the first questions is from Dayun. It says how many classes are there in a week? Here's what we got. Let me go to the next screen here. This is the way the class works. Is in the Mastery package, the first live Mastery session is July 3rd. That means that the last Wednesday of June, we will activate Module 1. All right, so what is that? June 26th, okay? June 26th, we'll activate Module 1. That'll give you a whole week to go through Module 1, watch the module, do the homework, watch the extra videos that we've got to go along with it, put together some questions, submit your questions in advance, and then we'll get together live on Wednesday. And on Wednesday the 3rd, we will talk about Module 1. Okay? And then we will activate Module 2. And then you'll have a whole week to go through Module 2 and kind of rinse and repeat. So basically every Wednesday, and again, if you can't make it to the live sessions, no worries. Submit questions in advance to our email address, and we'll either answer it directly or answer it in the live session, and you could watch a recording of that live mastery session. All right. Welcome aboard, Eric. Welcome aboard, Juan. Welcome aboard, Al and Josh. Great to have you all here. James says, I just missed the whole webinar. I just got here. Well, better late than never, James. What I would recommend is you just buy the course. No, I'm just kidding. We'll send you a recording of today's session, James. Okay? All right. I'm going to go back and look for questions. William, there is no discount code. You see how I crossed that out here? No discount code, William, because you notice it says $295 is already selected. All you have to do is fill in your details. All right, William? Chuck says, is there a special price for the self-study? No. The self-study is $295. I mean, $295 is a killer price, right? Especially for the mastery. I mean, with all of the resources and time and that we spend with you and help that we give you, $295, hopefully you're seeing that as a definite investment. So there's no discount on the self-study. If you order before the end of the webinar, you can get the mastery package for $295. All right. So again, William, there's no discount code, so you should be good there. All right. Sorry, I'm just scanning through the questions here. Gabriella, hopefully I answered your question on when do things begin. All right. George says, can you bring in a partner or can you share the course? Well, we're not in a physical like hotel conference room. All right. So there's no like bringing in a partner. Now, I can't stop you from having like your spouse sitting next to you and the two of you watching the course at the same time. Now, what I'm going to trust you not to do, George, is like share your username and password on Facebook and have all your friends and family log in. You know? What I'd rather you do, George, is tell your friends and family about the course and have them go buy it. All right. George also asked, are there any costs after the year? Well, because you get 1 year of access to the course. If you choose to continue on with VectorVest, after the 60 days that you have access to it, I believe it's $69 a month if you want to. Now, we highly recommend it because you'll probably see that it saves you a bunch of time. If you choose not to, there's no cost after the fact. You're still going to have a course that teaches you how to buy calls, buy puts, and how to do it the right way. We just feel it's a lot better to do it with the VectorVest tool, which is why we give you 60 days to test it out and make that call for yourself. But if you want to continue with our end-of-day version, the lowest price is like $69 a month. Lisa's like, does it work if I use the mobile app? Yeah, you can access the course on the mobile app. A lot of brokers have pretty good mobile apps as well. As far as the VectorVest software, the VectorVest mobile app is actually getting better and better as the months go by. It of course doesn't have all the bells and whistles as the desktop version, but you can access the course on mobile. Yes. All right, great question so far. Robert says, I'm in and registered. Welcome aboard, Robert. Kenny says, I caught a little of your webinar, but it clarified things I've been baffled about. I'll be purchasing the course as soon as I can. Awesome, Kenny. Remember, there's a discount if you do it before the webinar ends. Let's see. Gabriella, yes, we will email the registration. That's another tip for everybody. When you're filling out the registration form, double check your email address that you type in. That could be another reason that you don't get an email from us. I've had tons of people say, oh no, I fat fingered my email address and I put in an N instead of an M or something. So just double check things like that. Chris says, what is the guarantee? Well, it's a money back guarantee. So Chris, if when you go through the whole course, and actually I'm going to be 100% honest here, Chris, we require that you go through the whole course. right? Because we know it works and we want you to see the course. And the other reason is we only want serious people to buy the course. We're not just here to try and sell a bunch of courses and hope that people forget about it and put it on the shelf, the virtual shelf, and not look at it. We only want people to buy this course if they say, you know what, I'm going to give this my 100% attention for the next 6 weeks. All right. So the way the guarantee works is when you go through the whole course, if you still feel that you want your money back, just ask for it. You'll get all your money back. Okay. Kathy says, do you have tools within VectorVest that are specific to options? Yeah, it makes more sense during the course if we show you some of the things that we've got. We do have, we do have tools in VectorVest that are specific to options. But for this course, we try to focus on teaching you how to do things that you could with your broker. We're not here to sell plug-in modules to VectorVest. Yes, we're going to show you the main VectorVest tool during the course, but we're also going to have plenty of videos that kind of show you things with your broker. And there are some things you could do, some things that are better with VectorVest. But yeah, there's other tools that VectorVest has with options, but we're not going to use those. Like one of them is called Options Pro. We're not going to use that during this course. Gillian says, what if you're away and can't attend one of the sessions? Is there a makeup? Well, there's not quite a makeup. You could watch the recording of it. And remember, Gillian, you could always submit questions in advance. In addition to that, we have a support team here at VectorVest that is open, I won't say 24 hours a day, but we're open 6 days a week from like 7 a.m. until I think it's like 11 p.m. that you could call and ask questions. But remember, we're going to give you a dedicated email address to ask questions. That email address will go directly to our options coaching team. Elena, yes, we'll send a recording of tonight's session to you. It should come sometime tonight. You're welcome, Bernard. He says it was a good lesson and says thanks. Kenny says, yes, it's a great price and a great investment. I guess I'm stuck with the self-study. So if not, thanks and God bless. It will definitely teach me how to win. Yeah, the course is great. I wouldn't say you're stuck with the self-study. I mean, if you purchase the mastery, you get everything that comes with the self-study. And if you're, plus you at least get the recordings of these live sessions. Even if you can't attend them live, you get those recordings. Robert says, will the end-of-day version of VectorVest work? Yes, it will. Lewis will give you the end-of-day version of VectorVest because we think that'll be just fine for you during the course. Remember, we'll show you how to do things with your broker because your broker will have real-time option chains and things that you would need to look at there. Rupesh, it takes us a little bit of time to set up the VectorVest accounts. So what we say is you'll have access to the VectorVest tool by the first day of the class. Now, it could be sooner than that, but let me just say by Wednesday of next week, you'll have it. Chuck, yes, VectorVest has an Options Pro tool. We're not going to be using that tool during this course. Peter says, what if you're already with VectorVest and the 1-year access to the digital course? So you have 2 questions there. If you're already a member of VectorVest, awesome. So there wouldn't be any need to give the 60 days of access to VectorVest because you already have it. And you still get the 1 year of access to the digital course. Chris says, is there any need to buy additional software or services? Nope. No need. You might want to. You might like the VectorVest tool. But there's no need to. We're going to show you how to use options during the course. You're welcome, Lisa. You're welcome, Robert. Juan says, we are registered. Awesome, Juan. Funke says, I'm in. Welcome aboard. William, you're welcome. NCH, I'm not sure what your name is. It just shows your email address. Yes, we'll send you a link to the recording of tonight. Eric says, will you be covering selling puts? Not in this course, no. When the selling side of things, we actually have a course called the Options Paycheck, which gets more into selling options for income. Now, we agree, like Jim wrote to you in the chat box, we do agree selling puts is a nice strategy, but we just don't cover it in this course. Gail says, I'm in. Welcome aboard, Gail. William says, I'm on the phone ordering. Awesome, William. Welcome aboard. Sometimes I feel like I'm like at the front of a cruise ship. Welcome aboard. Welcome aboard. Your luggage is in your stateroom, William. Dayoon says, I'm in. Welcome aboard, Dayoon. Craig says, I assume I could take the self-study course at an accelerated pace, shorter than 6 weeks. Yeah, Craig, that's the one thing I would say would be the benefit of ordering the self-study, is the way that we have that set up is all 6 modules are activated immediately. And then you could pick and choose. I mean, you could go through them all in a week if you wanted to. You just wouldn't have access to any of the live mastery sessions. Craig says, when will this course show up on the digital chalkboard? Craig, you should have gotten an email from us, after you ordered. The email will contain a link with directions to access the digital chalk course. Right, there's a link in there to click on. Now, in the digital chalk course, right now you're only going to see like a welcome video. And then on Wednesday next week, we'll activate all the stuff for Module 1. You're welcome, Gillian. Kathy, I don't have information on Options Pro to give you right now. I mean, if you have information, if you want information, I'll just say give our team a call. Probably tomorrow when our Options Pro team is on staff. They happen to have left for the evening. Oh, cool. Craig, you found it. Great. Kenny, I'll paraphrase what you said. It says, your course is cheaper and easier than other courses out there, I'll just say. I won't specifically mention the course that you specified there. Yeah, we feel it's a very good rate that we're selling it for, and we put a lot of time and effort into how we want to present it so it is step by step and you get results. So thank you for that feedback, Kenny. Lewis, yes, we will send you a link to a recording of today's session. It should come sometime tonight. Tarsum says, I'm registered. Thanks. Welcome aboard, Tarsum. Lewis, we will send you a recording. We're not going to run tonight's webinar live again. We'll send you a recording. Eric says, what are recommended books on options? Well, first off, I'd say the best thing to do is take this course, Eric, which you've already signed up. That would be the best thing to do. There is a nice little book, but it goes into like every options trade that is possible. Take a look at something called the Options Playbook. That is a book written by Brian Overby. I believe he works at Ally Bank. But do this course first, and it'll give you all the basics you need. I'm not sure you need a playbook on every possible option trade out there. Cool. Thanks for the feedback, Andre. Ian says yes to the mastery package. Cool. Welcome aboard, Ian. Enrique says, I already registered. Great, Enrique. You're welcome, Kathy. John says, I've signed up with an exclamation point. Welcome aboard, John. We will talk to you at the first mastery session. And remember, we'll send you an email with a link to the private email so you can send questions whenever you want. Craig says, I've read the books out there. Take this course. Awesome. Thank you, Craig. All right. So, folks, it looks like that's kind of like the last question that I see. So remember, VectorVest.com/jumpstart. If you order in like the next 60 seconds, you get the mastery package for only $295. Okay. After today's session, this price will go up to $495. And then on Monday at 5 o'clock, the mastery package will go to $795. and the self-study will actually go up to $4.95. All right? So now is the best time to do it. Don't wait. Definitely don't wait past Monday. All right? Kenny says, we'll see you soon. Have a great night and bless you. Right back at you, Kenny. Bless you as well. We will see you at the first session. Right? All right. So, folks, have a great evening. It is nearing the weekend. Have a great weekend. Bjorn, all the way in Sweden. It is probably now 2:30 in the morning for you. I appreciate you being here on today's webinar, and everybody else who's here. Thank you for dedicating the time to be here in today's session and trusting us, and trusting me and VectorVest and Jim to help you, make a difference in your life. So thank you for doing that. It was an honor. We look forward to seeing you at the next session, and have a great weekend. Bye, everybody.